The following is a presentation of TFNN. The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien and Tommy O'Brien.
Welcome, folks, to Tommy O'Brien and Tom O'Brien. We do appreciate you growling and prowling with us out here. Right now, you get the Dow down 27, Nasdaq's off 37, S&P's are down 2.5. Gold contract is flat at 1,087. Silver back into 14, Tom.
It's volatility in that silver market.
Man, they slammed that thing. Silver's down 34 cents, $13.81. You got the oil market up 25 at 30.75. Bonds, the 10-year is flat. The 30 is down 7 ticks. Good old King Dollar's down 123 ticks. And, of course, each and every day we have our man, Mr. Kevin Hanks. And don't forget, folks, at TFNN, we broadcast live 7 o'clock in the morning, Tuesday, Thursday to 6 in the afternoon. Monday, Wednesday, Friday, we start at 8. Kevin's got an outstanding show, TD Ameritrade swim lessons at noon every day. Kevin Hanks, what's going on?
Good morning, guys. Happy Thursday. How's everything going?
Happy Thursday, man. I'm telling you, the buyers are on strike out here, Kevin.
SPX down 9.2%. I'm going to tell you something, Tom. There are some uncomfortable meetings going on in some of these trading rooms across this country, New York, Chicago, and in different towns. There are some people that are uncomfortable right now.
Yeah.
And I've been in some of these meetings, so I know how they go. There is some, let's put it this way, there is some creative tension in these rooms because they're not sure what to do.
With large positions, I mean, they have to adjust pretty quickly. There already is some really heavy price destruction. But,
right.
You know, you run a large portfolio, man. You better basically get some insurance pretty quick, right?
Yeah, it's like steering an aircraft carrier. You're going to make big turns.
Yeah.
You know, you can't. You're not. Yeah, I mean, depending on the size of your account. I mean, you know, there's hedge funds right now worrying about redemptions.
Yeah,
right?
Sure.
There's a lot of things going on. I mean, a lot of the selling that you're seeing right now, that's people that have to sell, not that want to.
Right.
So,
well,
I mean, you know, like I said, there's some difficult decisions being made in trading rooms all over this town.
Yeah, you know, you can see. The thing that's intriguing is that it's a good 3 or 4 weeks ago that you guys were doing the program, and what came across, and I believe Scott and you and Cindy had brought it up, there was a trade, was thousands of puts, and you know, it was really like way out of the money. I'm saying, you know, and you guys were actually saying that you think it's probably an insurance policy more than anything. But man, that trade is now in the money. It's like, oh my God. It's like, I was thinking about this last night on the way home because it was like 40,000 puts in the S&P. I mean, it was a monster. And it was a good 6 weeks ago, you know, because it was before Christmas. And I said, wow, man, like, you know, it was a $6 million trade, I remember you saying, just in the option market.
There's an old saying, Tom, little puts grow up to be big puts.
Yeah, right.
Right? And I have spent my entire career being a buyer of little puts. So I was never afraid to buy, because I always considered little puts, I used to call them liberators.
Okay.
Because if you own little puts, that means when the market starts selling off and people come in to buy big puts, you can sell those and you're covered from a unit basis. Right. And your risk is defined. So I was always a big proponent of buying the little puts.
Yeah.
I've done it my whole career.
No, you can. Man, I can't even imagine running, you know, millions of dollars of portfolio when you get a move this quick. I mean, I think this is one of the fastest moves that, you know, the market has done. Well, I know it's a fast move the market's done in like 7 years. I mean, it's a quick move. It's no doubt.
Yeah, so much for the liquidity that high frequency trading provides, right?
Oh yeah. Well, you know, it's wild about that. And folks, depending on how long you've been, you know, in the marketplace, the mantra used to always be that the specialist. The reason that they were the specialists is that they would always step in front of the market. Well, guess what? The specialists never stepped in front of the market when it was going down.
Absolutely not.
Yeah.
Right. They're the financial drop cloth of this market. That's where you go when there's nowhere else to go.
Yeah. No doubt.
Right. But how about this? everything that's going on, all the bad news out there, the banks are still making money, Tom.
Oh, I know.
$24.4 billion J.P. Morgan made.
I saw that in the spread. So the J.P. Morgan, no matter how many fines they pay or anything else, folks.
Exactly. They just keep cranking.
They do. And the spread they're working with right now,
That's right.
is 10 basis points, which is, it doesn't sound like a lot. That's only 1/3. There's 32 basis points basically in a point. But you got to remember something. They're making that on air. It's like, and on billions, it's probably more than billions, huh? It depends on how much they actually have in those accounts.
Right.
Yeah.
And just remember something. When you talk about these banks and you talk about all these places that store money for people,
Yes.
right?
Yes.
Any raise in interest rates
Right.
feeds right into them. They make money exponentially as rates go up.
I know.
Because they're, in essence, storing money for people. So they want rates a little higher. And they're talking about on their conference call today how that quarter point raise in interest rates will show up in their bottom line second half of the year.
Right. And that's, they don't have to do anything else because the money's already in there.
Right.
Yeah,
And so
yeah.
you're watching that 10-year yield around, it's low right now, right? 206 last night,
Yes.
up a little bit this morning. If you see that 10-year yield rising in interest rates, if they raise once or twice, this year,
Yes.
that helps the banks enormously.
Yeah, no doubt. Well,
Yeah.
it's going to be interesting because since we were talking, the Dow's already come back 60 points. And what has happened, folks, is that the Nikkei last night went to a new low but rejected it. The DAX rejected a low this morning. So we might be seeing a rejection, which would really be deviant. But, Kevin, we look forward to the show at noon.
Thanks, Tom.
a
Remember,
good one.
guys, they don't ring a bell when the lows are in.
They don't. Ding, 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 ding.
Have a good one, guys.
Okay, man. You stay right there, folks. Tommy and I come right
just
back.
started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. And don't forget, folks, at TFNN, Monday, Wednesday, Friday, program starts at 8 o'clock in the morning, 8 to 6. Tuesday, Thursday, 7 o'clock in the morning. Monday, Wednesday, Friday, 8 to 5, live programming. Tuesday, Thursday, 7 in the morning to 6. Markets out here, so check this out. This is going to be wild watching this whole thing shake out because you had a couple different things happen. When we opened the S&Ps and the NQs, they broke lows, they broke them with volume. Let's just go over and take a look at the SPY for a second, because what did happen last night in Asia is that I was watching the Nikkei. See, this is going to be pretty cool. This might be a rejection.
It's quite a bounce we're coming into now.
Huge bounce.
It's like
huge
a 1% bounce since we came on the air.
And what's cool is that if you go over to the Nikkei, watch this. I'll take a look at the Nikkei. Now, the Nikkei closed down 400 and something points. NKY. But what you're going to see is that we did, so that the Nikkei still closed down 474 points. It hit a low of 16,944. It was coming into the low that was generated on the 29th of September, which had taken out the August 25th low. But you can see that rejection. That's a pretty good rejection, you know. Now it wasn't just that. If we go over to the DAX in Germany, we take a look at Germany. Germany's still down. Germany was rejecting this a little bit more this morning. Right now, Germany's down 259.
Yeah, about 2.5%.
Yeah. Our S&Ps, what they've done is this: that they've come into. This is a good rejection.
Yeah.
This is a good rejection.
Let's just because this graph seems like it's so easy, we're looking at the Nadex platform,
yes,
of course. But I mean, that's dramatic. 4130, we're coming on. We're almost at 4185, 55 S&P points.
I know, and you know it's amazing. So check this out.
I'm sorry. That's not. No, this is the tap.
NQ,
okay, that's what was confusing.
Oh, that's all right. That's NQ
it's
points.
Still a huge move.
But listen to this. This is amazing. You know, you were writing about the binaries, right?
Yes.
And I was looking before we got on the air. The weeklies. So this is, folks, if you're trading the Nadex product, right? Now, I haven't done the weeklies yet. And what happened is this morning, when the market was open, right at 9:30, right? I was looking at the dailies, and then I was looking at the weeklies. Now, the weeklies, right, were...
What were you looking at for? What
the
index?
NQs.
Okay.
Yeah, the NQs. So what had happened, it was only like 120 NQ points you needed, and I could have got the deal at $20. And I say, man, that's not bad for 2 days.
Okay, sure.
You know what I mean? So it's $20 to make 80.
Yes.
Now, I suspect that went up dramatically. You know,
what side were you playing? I don't know.
I was buying it.
Okay.
I was buying it. You know, for an NQ to go 120 points is not a big deal in 2 days. You know what I mean?
Sure. That's like 3%. Just to put it in perspective.
Okay.
Yeah, I know it's everything is perspective. Just to put 3% in 2 days. That's
of the NQs, yeah.
It's a 4,000 point. We're looking at it right here. 4,000 points. So if you're looking for 120, that's 3% move.
Yeah, I know.
Just going,
I guess it's been moving like that.
I say it just moved 1% in the last 15 minutes.
Right.
So
right.
it's possible, but just to put it in. Okay.
You know, so it gets into because that was.
I was just going to pull up. I don't know what you're.
Oh,
okay.
that was defined risk. And it's almost like though what does happen is that when I do those binaries, I like to get the ones that are either 10, 12, 15 bucks. 20.
Yeah, no, I do too.
20 it's like, oh, that's a lot because.
Yeah, well, I've talked about it a lot too, and that $5.5 Swift change from 20 to 15 has huge implications from a risk-reward standpoint, as opposed to where at $20 you need to be successful 1 out of 5 times.
Yeah.
But let's say at 15 you're risking 15 to make 85, and so that comes down to closer to 15, 30, 60, 75, one out of like 6 or 7. You know,
Which
so
is really
it's
good.
a big difference. in
Big
terms
difference,
of-
man. Big difference.
Yeah.
And, you know, what does happen is that when you're into those, whether you do the longer ones or the shorter ones, if you can get some movement, you always can sell a couple quick to get your money back.
Yes.
You know?
Yes.
Now I'm bringing my percentages. Well, you know, that's interesting. So I guess getting your principal back is a big deal. I mean, that's the way I'm looking at it. Do you know what I mean? But I know that I'm bringing my percentages down, too, because you saw, like, if I buy 5 and sell 2 to get my money back,
Right.
then I have 3.
Right.
Then
And you're not making as much as you could
exactly.
have. Right.
And
So
over a longer period of time, I wonder how that whacks out.
yeah.
You know?
And that's where you just want to have a plan. That way you can analyze that plan from the beginning.
Yeah.
And if you know that, so that would be a case where if you're risking, let's say 15 to make 85,
Yes.
you can't make the calculation off those odds.
Right.
If you're going to take some money off the table, because that means that you're never actually going to be making that 85.
Exactly.
So you do
Right.
need to be successful maybe 1 out of 4 times the way you're doing
Okay.
it, but you're not going to lose as much because you're going to take that money and
You're going to get
and
the principal
break even
back a couple
sometimes.
times.
Exactly.
Right.
Yeah.
Right. Yeah.
That's probably lower variance too, is what they'd say. As in, it's not all you lose it all or you make it all. So you're
Right.
decreasing your variance a little bit, and that it helps for the swings, basically.
Yeah. And what I don't know
people
yet,
can appreciate.
well, what's happening, it's pretty cool. So what's happening is that I'm trying to calculate that down right now, and we'll find out in the next few weeks of how that actually does straighten out. Do you know what I
Sure.
mean? As to how many trades that get actually done, that I get some money out versus I don't get some money
Sure.
out. You know, and then what's left after that. You know, look at that move.
Yeah. Just want to pull it up again.
That's a beautiful thing. That's pretty amazing.
I mean, it really is when you look at. We're now going off. So the low there was 41.24.
Yep.
So we're now 70 points exactly off the low. That's almost approaching 1.75%.
Right. And that's
For the
really,
index.
That's insane. That's sick.
Now,
Now,
running into this will be right at the open though, which
Right.
this will be interesting. What happens right now?
yeah, it's the trades are set up, and the larger portion here, I suspect we're still in a structure that more than likely is a B to a C of an ABC structure on the way down. That's going to be just a monster, man.
Yeah.
I mean,
you don't have to go back far. Let's just look at the current year we're in, and that's quite a little blip, right?
huge.
Yeah.
Huge.
Yeah.
Now, for all you folks in Boston, now this is about as intense as you get. Let's pull up GE. So good old GE. GE's trading at 28.87, and now check this out. So GE has 305,000 employees. Now, out of those, but GE just announced they're moving to Boston, and the amazing part is that they're moving to South Boston.
That's right.
That blows my mind. It doesn't blow my mind, but it's just absolutely phenomenal. And they're not taking 300,000 employees with them. They are taking 800 highly paid employees with them, though. That's quite a coup.
Yeah. And they're saying they're leaving Connecticut right now, and Connecticut has some problems.
Huge. And that's
I haven't
fair.
dug into it, but I know it has to do with their tax structures for businesses, and it's not good, whatever they got going.
Right.
Yeah.
And, it's almost, GE probably got, Jack Welch is from Beverly.
Okay.
Jack Welch ran GE forever,
Okay.
Beverly, Mass.
Okay. So where are you going with that?
Oh, that helped GE. I'm sure that he was a negotiator probably that, hey,
Maybe.
well, they got $125 million in tax breaks coming into
Sure.
Massachusetts.
I don't know if Jack Welch was a player in that, as you're insinuating he must have been.
Wow.
That's just right out of left field, but.
No, it's
it's not.
No,
Okay.
not even close.
No. Oh. okay.
Tommy and I come right back, folks. Dow's up 87, Nasdaq's up 13, S&P's up
It's hard to tell
11.
if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Tom O'Brien, we do appreciate you growling and prowling with us out here. Right now, you get the Dow up 126, NASDAQ's up 22, S&Ps are up 13. And you talk about swings, we'll see what happens with this natural gas market. So natural gas numbers are coming out. The stockpiles fell 168 BCF. Should we pull up natural gas over here? And this is where, let's see where we are with natural gas. If you haven't test drove the Nadex platform, folks, great time to do it. Come over to our website at TFNN. You can hit the banner on the top, on the side. You can see how these contracts trade. Oh my God, look at natural gas. Oh man. And the stocks fell, right? That's what I was reading. So the supplies.
Yeah, the stockpiles fell, but it's always, what's the expectation? Just so as, we'll look that up, but yeah, the market's.
So we just went from.
So this bar.
What do we go from 220 to 210?
222
to 217. Okay.
So 5 cents.
Yeah, that's a move. That's a move in the natural gas market anyway. That's pretty intense, man.
It definitely is. And of course the market, go for it, it's just continuing up.
Yeah, the market, once it took out, if we go over to these S&Ps for a second, what you're going to see is that intraday, we just took out this whole structure, and that would set up, so the structure I'm talking about is that yesterday, well, actually, that's last night, 0300 hours, yeah. Last night, you were at 1896. We get down to, 1896. You got on 1871. Seems like we were lower than that. Once you took that out.
We were lower than that.
I know, that's what it seems like.
No, 1871, is that what you said?
Yeah.
Yeah,
I guess that's it. Okay, so 1871 to 97, 71, that's 25. So you can add 25 on top of that. So that's going to give you 1924 or something that we can run up to. That's going to be pretty wild watching this thing shake out. And that's 1921 up there, and that's where we fell apart yesterday at noontime.
This is 1924, right up here.
Yeah, right there. Yeah. Right. And all I'm doing is I'm taking the top of where we were at 0200 to the bottom and saying, okay, you can...
The same move on the way up.
The same move on the way up, right. Oh, you just double that move. Look at this thing, man.
Yeah.
So inside the Dow, let's see what's moving out here. Inside the Dow, it's the oils. We got Chevron up 4%, Exxon's up 4, GE's up 2.5, JP Morgan's up 2.4. Let's see what kind of move that is for Chevron. That's $3. 3.4. Exxon's up 3.2. And they got strength. Oh, that's interesting. That's wide price spread, huh?
That's a big move.
Someone's going. That is not you and me in there.
No.
That is a monster in there. CVX. Someone's come into these oil stocks pretty good. Yeah. 3.4 million. It's what, 1010. You're only going to need 15 million. That's a big number. That's a big number, man. Inside the NDX 100. Let's see what we got inside the NDX 100. So Cognizant is up 3.9%. Celgene is up 3.8%. Fox, that's interesting. 20th Century Fox up 0.75.
I wonder what's going on there.
Yeah, I know. Let's take a look. Because these...
this is going to have to be something.
Let's see. Fox, others to unbundle Fox Business Network. Is today the 13th? No, it's today's the 14th. Yeah, doesn't... Who knows?
There's a lot going on with that content.
There is,
field,
man.
With Netflix,
There is.
Amazon, Fox, of course.
Let's go to, look at this market.
Yeah, it is crazy.
Rocket ship. Let's go to Carlos. Carlos, what's going on, brother?
Good morning, Tom. Good morning, Tommy.
How you doing?
How are you guys?
Good, man.
I'm doing very well, thank you.
Good.
Before I proceed, I want to thank you for your opinion yesterday on Chipotle.
How's it doing today?
I saw that this morning in the spike, and I'm very happy. Thank you.
Oh, look at that.
Wow,
That's awesome,
sweet.
man.
Yes.
So
now,
you got it up another $17. That's great, man. Awesome.
Yes, it was a very good move, and I don't want to know anything about Chipotle anymore. I just want to forget about it.
You know, it's interesting. I saw something on CNBC, and of course, I was thinking about the call, and they said they were going to open like 220 new stores this year, and I just thought, man, can you imagine a new store getting opened and how hard that must be in an area right now?
I heard the same thing.
Yeah.
And I'm saying to myself, man, that's even...
They're just plowing ahead, and they know that 2016 is just going to be a mess, I think. And you know what? But their whole marketing campaign is just going to be coming back, so I think they're just notching up some tough work, and 12 months ahead, they're trying to think. Interesting, though. Opening 200 new stores, as nobody even can fathom.
I ended up selling my 7 contracts I had this morning, and I forgot about them. Yes.
That's a great 2-day pop. You can't go wrong regardless with that.
I have another situation, right? Yesterday when I was practically talking to you, there was the oil report.
Right.
And I had an order for some calls and puts on oil.
Okay.
And I'm gonna speak about one specific one because I have several ones. I'm long oil.
Yep.
And I'm only expecting a rebound, just like in Chipotle.
Sure.
I bought some 7 calls on CVX.
Oh, nice.
They have a good pop today.
They're right now in the green.
Yeah.
But what is your expectation, not only on this specific one, in general in oil?
Well,
or a rebound?
What's really cool here, I mean, CVX is at 85, and, you can bounce to 89. It actually has a high-volume spike at even 98. The way they're buying this thing this morning, man, Yeah,
I bought them yesterday. There were several days because I was expecting, after the report, I noticed the bottom was not broken on oil.
Right.
Which was, when I call it bottom, it's just the 30s. Everybody
that's
was
right.
talking
No,
about
that's right.
30s.
It spiked down and rejected that price. Yeah, no doubt. Yeah.
So I had some previous positions on SEO, Spoots, and which yesterday with the report they were raised. And now they're coming back to the green again. But the other ones just spiked up yesterday and today. And if we get a rebound in oil, what is a good place to start selling my positions because my fingers are getting a little. I want to sell,
Itchy
but I
trigger
don't want to
fingers.
sell too soon.
You know what I would do? Okay, so check this out, folks. This is pretty cool what Carlos has here. He has a position, I believe you have a position in the oil contracts and the options too, right?
Well, what I have is SCO.
Exactly,
And
okay.
I have puts on that one.
You have puts on the SCO?
Yes.
Okay, let me just make sure I know what the SCO is. 1 second.
It's short oil.
Oh, that's good. Okay,
So he's puts
okay.
on it, yeah.
So you got puts on the oil. What I would do is this.
He puts on the short there.
He has puts on the shop.
It's the same way we were going yesterday.
Exactly,
Game long. Okay.
exactly. And then what he has, folks, is this, is that he has calls on CVX. Now, what happens, right?
Yes, and CVS.
Okay, stay right there. We're going to be coming back because this is a kind of a cool position to be in, and I'll just tell you what I've done in the past.
Thank you very
Dow
much.
right now is up 227, Nasdaq's up 54, S&Ps are up 26. So we're going to be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We're talking with Carlos. We're talking about oil. We're talking about CVX. So, Carlos, what I would do is this, and this is why, okay? The oil market, the last time that the oil market actually didn't move, CVX and Chevron actually was still going down, actually went up those $20. Each one of them. Stocks did. I would cover that position since you have those puts now in the money and the SEO. Okay? And this is why. So we can look at the oil contract. I have it up. It just continued all the way down, right? Now watch when you look at Exxon or Chevron. What happened is that even when the contract was going down, once Chevron and Exxon caught a move, that thing, blasted off. So your risk versus your reward, I think you got back in the money on the short of the SCO. So you cover that. You got a great trade going to get your money back. You got a great trade going on the Chevron, and you leave those ones on.
Yes.
Because and this is the deviant part. There's no doubt about that. Meaning that, let's just see here. I can actually put this up together, I believe. If I go, I think I can take, let's see. I think I can take the oil contract and show you the correlation. Let's see, compare. So that's, I'm going to compare that to CVX. Okay, cool. Let's do it this way. I'm going to update that. Okay, so now what you have is that chart. If you're watching Tiger TV.
Yes, I am.
Okay, so you see the chart is that when oil continued down, and in fact, so the white line is oil, right?
Yes.
And the oil continued down, and CVX went up. So I think on a risk-reward basis, you got action here, man. You get your money back on the oil, on the SCO. You lay out there with the Chevron, and you basically grab the next few days with some good action, man.
Perfect. Do you have time for something else?
Yeah, sure.
Okay. I'm sure the market practically. I have covered some I practically sold some part of my ETFs, but the ones I have with some gains.
I'd cover right now.
You cover them right now.
Yeah.
Okay.
Yeah. This is. This
is what I did, and I want you to help me and correct me if I did it wrong. I have FAZ.
Okay.
Which is financials.
Yeah.
And I sold half of my position, but I left the other half.
Okay.
But I actually put on that FAZ the opposite position and put and options.
I'd cover them all right now. Okay.
Cover them all.
Yeah. So
Okay.
FAZ, what happens on bounces is this. Okay. So this one, we came down fast, furious, all of the above, right? And I know compared to like last night, you're saying, oh, I just lost money back. Well, you're still in a great position, man. You know what I mean? And you want to grab it because the bounce that we can have here is a decent bounce. The S&Ps, it's very unusual, when you get a large move like this, and you can bounce. It's just a normal bounce, but this normal bounce can go a long period.
All right. The only reason I did it that way is because sometimes I find it very difficult to catch a good level to get in.
I agree. I know, man. It's
sometimes when I try to get in, well, they gap up or gap down, and I'll say, oh, I should stay. Oh, I should have sell it. And I don't know if you go through those same feelings, but...
Oh, yeah. Go through the same feelings. I've been talking to myself for 48 hours, okay? The bottom line is I'm a bear, and for 48 hours I'm talking to myself saying, I can't believe I'm still looking for a bounce, but I was, so...
My wife is getting bored of hearing me. She, well, I tell her everything I think I'm going to do, and she said, well, why don't you call Tom O'Brien, because I need to sleep.
Well, you better let her know that I talk to myself too, man. So there's no geniuses around here, believe me. Do you know what I mean?
Okay.
So, and that's what you're hearing off me. Do you know what I mean? And I understand exactly what you're saying. Last night, I'm saying to myself, and right what you said, the hardest thing, and this is what ends up happening, folks, it's at the beginning of these moves. Like, this is going to be a large move. So it's at the beginning of these moves that it's like you really got to stay acclimated to it, and it's like, okay, man, you could sit here and say that, okay, it's just never going to stop going down, but that's not how it works, man. You get bounces in, they go up, and then what you have to do is this. Then you just have to basically lay there. Like when you get a good bounce going, right? If you had called and there's a good bounce going and you're laying out those shot positions, you would hear me say that, no, stay there. Because I've stayed in shot positions and taken some heat, and I will stay in a shot position when we've had a downdraft like this and take some heat, because the larger position I feel is like really down, you know? So it depends on how much you think you can get versus what you're actually risking. Sure. And right now you're risking way too much on the shot side because we've gone down so dramatically. And you get, hey, your head's going to be cleaner as soon as you clean it up anyway. So.
Okay. Can I say something else? I want to thank you, Tom, for when I talk to you, I feel a little bit more confident to doing what I'm doing on the market. I've been doing this since I started listening to your program, and I have learned a lot, even though sometimes I cannot explain it. But I want to thank Tommy, too, for the way he explained things yesterday. I listened to his advice, to his opinion, and it was very, very helpful.
Doesn't he? He can explain. He can explain it a lot better than I can. There's no doubt.
Carlos explains good stuff to us. It's awesome.
Oh no, I know. Yeah. I know, man. It's an important. There's no doubt. I've learned a huge amount off him also, and it's really cool. And you know, detail-wise, I'm trying to get better at it, and it's important. I understand that. Do you know what I mean? So
yeah, I like the way he talks. He sounds very well educated. I like that.
Yeah, well, he's definitely, and because we're in the trading business, the details are absolutely crucial. There's no doubt.
Sure.
You know, so it's because if you lay the groundwork out and you pay attention, you know, to like, okay, what did you do? What is the percentage? You know, did you close some positions before? Like when I was talking about that all makes a difference that we all can learn from. You know, because it's a probability game. That's all it is. And what happens on a nice volatile market like this, folks, whether you're a bull or a bear, there's bread to be made. Just got to get those numbers straight, and you know, and you got to move quick. You can't hesitate, man. So
yeah,
cooking, brother.
Well, thank you very much. Have a nice day.
You too, man.
Carlos.
Have a great one, man. Have a safe one. Yeah, see this baby.
Oh, it's powerful,
isn't it?
Yeah, I mean the Dow, everything was negative when we came on the air.
Yeah, by like $70. Right. You know, so you've had that nice bounce in a big way. Bonds, okay, so, you know, when I was just talking to Carlos about being depending on what my conviction would be. My conviction on bonds, and this is going to be wild watching this shake out, man. My conviction on bonds is that I think that's going to be a monster trade. I think bonds are really laid out. And it has to do with we were down so dramatically, and the 10-year couldn't take out a high. It's like, hold it, man, you know. These rates, and that might be the next thing that really hurts the market, you know, on the next leg down.
Sure.
Stay right there, folks. Tommy and I come right back. Dow's up 230, Nasdaq's up 60, S&P's are up 28. We're going to right back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. You have the Dow right now up 1.4%. The Nasdaq's up 1.2. S&Ps are up 1.2. And don't forget, our man, Mr. Basil Chapman's going to be coming up next, growling or prowling with you. Then we have Swim Lessons from TD Ameritrade headquarters. Steve Rhodes, Dave White. I'll be back here this afternoon. We talk about Dave White.
And Andy Hecht.
Andy Hecht. Thursday. Oh, it's Thursday, man. Thursday. It's a beautiful thing.
It is.
Man, time flies, doesn't it?
It does, totally.
I can't believe it. So when we talk about time flying, Dave White has a workshop next Wednesday.
Yep.
Has a white paper on the site, but has an additional white paper, right?
Yeah, so we talked about what he did under Breaking News, which is just a brief introduction to kind of what he was going to talk about. And then yesterday, for his subscribers only, he put out kind of a 3 to 4 page detailed white paper as an introduction to the course. So if you sign up for Path of Least Resistance or Tech Insider, you'll receive that white paper instantly. If you sign up new, it just gets emailed to you directly so that you're ready for the course on Wednesday. And then he'll be doing his workshop Wednesday night, 5:30 to 6:30.
And folks, if you can't make it live, that is archived on your page for 30 days. So check it out right on the front page of TFNN. And of course, what you do have is that the volatility's in the market in spades. Dave has a new way of looking at short positions in the marketplace.
Yeah, so
right?
he's deciphering the information out there to get a quicker read on the short volume.
Right.
Which is important, right?
Yeah, it's huge, man. It's absolutely huge.
We talked about details before, right? That's a detail for sure.
Well, yeah, and let's go right over to Chipotle. If you go over to Chipotle, what you're going to see, that's not even that bad. That's pretty amazing, actually.
That's a tough one. It's come down so far, right?
It is. It's come down $300.
Yeah.
The short position is only saying it's 8.2% right now.
Now, again, though, that's what Dave's going to talk about.
Exactly.
Is when is that data real?
When is that live?
Yeah,
exactly.
And that could be as old as 22 days, 23 days he goes through, depending on when you're filing and when they choose to make that trade. Of course, 3 weeks later. Yeah.
Exactly. Yeah.
You're talking about 3 weeks. That's the middle of December right now.
3 weeks.
We're far away from middle of December.
Yeah, not even close. We've been talking about the DAX a little bit earlier, folks, and the DAX has rejected lower price. That'll be closing in another 35 minutes. And you can see the DAX got down to a price point of 96.14. You're at 98.27 right now. The lows that were out there, it was 93.38 and 93.25. That's saying, but if you take the Nikkei, you take the DAX, you're going to take our own markets, this bounces on. The cool thing here, folks, is that, John Logan goes over all the markets, 8 o'clock in the morning. I go over all the markets in the afternoon. It's important. You don't have to trade those markets, but it's important to know what they did.
Oh, for sure.
Because they give you a hint.
We're in a world economy, so you need to know what Asia and Europe are doing for sure. Just to have a frame of reference to keep, perspective on what's going on for sure.
No doubt. It's a one world deal.
It is.
And that money moves quick. And it might be 24 hours, 36 hours in between that. But you can get you can get a clue on how these markets are moving and where the money is moving and how fast it's moving. So check that out. Gold's still holding a bid. Silver, man, whoever keeps whacking silver, man, it's almost like that $14 level. And it is so crazy, man. It's just a trading range.
I was just thinking, it's a great range if you just keep catching the up and down. For sure.
Exactly.
Yeah.
But it's like, I really wonder who's on the other side because, as you say, it's a trading range. Someone's on the other side, and every time it goes to 14, whack it,
totally.
Bang. And they hit it hard, folks. Yeah. They don't hit this thing soft. If it's like, you get over here and take a look at this thing, it's like they did the exact same thing again. I mean, it's like amazing, And, hey, we'll see where it shakes out. You stay right there, folks. Mr. Basil Chapman's going to be coming up next. Dow up 200, Nasdaq's up 46, S&Ps are up 23. If you do enjoy the program, folks, please tell 3 people. TFNN.MLBI, 24 hours a day.
Thanks, man.
Wow! Go get them, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.